Hi everyone, welcome to our Phillip Research Morning Call. Today we have a few updates on our agenda. We'll start off with Phillip on the ground for Prime US REIT and Sunpower Group, followed by an update on Capital Corp. We also have technical analysis on some tickers before ending off with our update on IX Biopharma as well as our usual Singapore Weekly. So without further ado, let me begin. So first, we have our Phillip on the ground for Prime US REIT. We hosted a webinar for them last Tuesday, so we just wanted to discuss some of the key highlights during the webinar. We do have a rating for the counter. Our call is an accumulate with a target price of 94 US cents. So generally, 1Q results were stable. This is due to high rental collection rates at 99% and minimal concessions granted to tenants. Year on year, gross revenue and NPI remain steady. In the latest update, Prime is starting to see leasing activity recover for most of the markets that Prime is in. It managed to sign more leases which are longer tenured as compared to a quarter ago, and rent reversions recorded were also very positive. We should still be seeing very positive rent reversions going forward, given that average portfolio in place rents are still 6.5% below market rents. For the second point, portfolio continues to be well diversified across assets, geography, and industries. No single market or sector contributes more than 16% of the portfolio's cash rental income. For greater defensiveness, more than 70% of the portfolio's cash rental income is generated from established and growing sectors like your tech, science, media, and information trade sectors. As for the leases due to expire this year, it actually accounts for less than 10% of the portfolio and is well spread across all properties. So now for outlook, we are looking at a swifter return to offices as more citizens are getting vaccinated and also more companies are getting their employees back to office. As of date, 42% of the US population are fully vaccinated. 1Q GDP was also strong at 8.4%, while unemployment rate fell further to 5.8%. There are some key dates to look forward to, like mid of June, 4th of July, and first week of September, because these are the dates when schools actually announce their reopening, and also more companies have announced a return of office employees. In the near term, there can be a change of use of common spaces change of use of common spaces to cubicle spaces, and also bigger space per due to proximity guidelines. That said, Prime believes that there will still be a need for office space for human interaction, especially for activities that cannot be done online. For the last point, Prime is on the lookout for acquisition opportunities. There have been more interesting deals in the acquisition market as of late, particularly for Class A office assets in urban centers. During the webinar, there have been a few questions asking if Prime will explore acquisitions of other asset classes. As the REIT continues to evolve, it may look at other areas, but for now, it's still US office. So with low gearing of 33.8% and also debt headroom of 290 million to a 45% gearing, Prime is in a good position to take advantage of all these opportunities. So this is all for Prime US REIT. I'll pass my time on to Vivian for Sunpower Group.
Thank you, Jie-Hui, and good morning, everyone. So we also had a webinar with Sunpower last week, and I will be covering some main points mentioned during the webinar in our next slide. We do not have any coverage on Sunpower. So a brief recap first. Sunpower Group is an environmental protection specialist in proprietary energy saving and clean power technologies. Following the disposal of the M&S, manufacturing and services business, their main focus will now be on the green investments, or GI for short, the GI business segment. So for this business segment, Sunpower mainly invests in and also operate centralized facilities that supply the industrial steam to a wide range of industries. Not forgetting, they are the exclusive supplier to the factories within industrial parks, and also steam is a non-discretionary input for the productions. So if you refer to the second bullet point for the first Q21 results for the financial period ended March 2021, The revenue was higher, but PATMI was lower year on year, and the lower PATMI was mainly due to lower fair value gain on convertible bonds. So the higher revenue from the green investments business was mainly due to the commercial operation of the Shantou project phase 1, which commenced since 4Q of 2020. The tranche 1 of the special dividend has been declared. Ex-dividend date was last Wednesday. As for the second tranche, they are still waiting to fulfill the requirements before receiving the amount from the escrow account. Some other main points include rapid expansion of the GI projects over a period of 3 years, as Sunpower grew the GI business segment from 0 to currently 9 projects in operation. And with the disposal of the manufacturing and services business, something to take note for the GI business is that it provides long-term, recurring, and high-quality income and cash flows. So the M&S business is mainly order book driven, while the GI business, as they supply the steam to the industrial parks over a period of maybe, say, 25 years or 30 years, it's long-term and recurring. So if you refer to the bullet points on your right side, other points mentioned include how they mitigate the high costs, for example, the high coal prices that have spiked recently. So other than passing on this cost to their customers, they also look for other ways, for example, using sludge as a substitute for coal. So they operate in this under this sustainable business model called the circular economy model, if you refer to the graph on your bottom right. So you can see that, for example, the waste from the sewage treatment plant, the sludge, goes to their GI projects as production input after it's treated. Then, for example, again, the waste that is ammonium nitrate and ash from their GI projects goes to the building material factories that they also use as production input after treatment. So lastly, for the FY 2021 outlook, Sunpower is anticipating additional contributions from new plants, including Shantou project, Xingtai Zhengda project, and also the Tongshan project, as construction of either phase 1 or phase 2 for these projects are targeted to be completed by end of 2021. Lastly, they are also continuously ramping up existing GI projects. So for example, the Changrun project that would start to supply steam to Sunli under this 25-year exclusive supply contract. So Sunli is this one of the largest towel and blanket manufacturing enterprises in China. So that's all for Sunpower Group. I will now pass on the time to Terence for Keppel Corp.
Thanks, Vivian, and good morning, everyone. From the title of our slide, Keppel is approaching final resolution on its investments in KrisEnergy. Following KrisEnergy announcement that it has filed for a liquidation notice. So in our next slide, next slide. So following KrisEnergy's announcement that it has submitted a winding up petition, Keppel will book a loss of 318 million Sing dollars in respect of its exposure to KrisEnergy in its first half 2021 results. So we've provided a table here on the left-hand side to show the carrying value of Keppel's investment in KrisEnergy. So you can see for the second column here, the 318.3 million US dollars is the carrying value. We translated this to Sing dollars on the last column here, which is about $423.2 million. So out of these 423.2 million Sing dollars, they expect to incur a 318 million Sing dollars loss on the carrying value. So that when you take 423 minus the 318 million dollars here, that is recoverable, that is written off, then the total assessed recoverable amount is $105.2 million. So this recoverable amount and any further loss provisions will be reassessed at the end of each subsequent financial period. So for investors, when you look at this, they cannot see this $105.2 million is really the maximum loss that they can that they are really going to incur already. So if they're able to recover the full sum, then there will not be any further impairment. But this 105.2 is the maximum downside that they will incur. This $318 million, which will be written off in the first half 2021 results, will also have no impact on the financial year 2021 interim and final dividend from the latest impairment, because they will ring-fence this impairment, and because this investment in KrisEnergy is actually non-core. So in for us, we maintain our buy and based on our sum of the parts target price of $6.12 on Keppel. We think the latest clarity and the resolution on Chris Energy, which has been overhang on the stock, is a positive for the group now that there's a final resolution. So our target price is a 10% holding company discount, and also translates to about 1 times FY21 book value, which is a slight discount to its 5-year average of 1.05 times. So that's all from me. I'll now hand over the time to Wei Ren.
Right, thank you very much, Terence. Okay, so today I'll be sharing about the STI. So on the monthly, followed by the weekly to the day down to the daily, and then followed by 3 counters, namely Nanofilm, CICT, and then Thai Beverage. So for the STI, you can see that the STI has last month it did have a very strong sell down, but it rebounded at the last week of May at 3,000 points. So technically STI did rebound slightly, but however, the momentum remained weak as it fails to clear the resistance point at 3250. So hence, I think that price is going to be like hovering, like a slight correction before going point D. And then looking on the longer time period, should point D will remain crucial, which is at a 3,500 inflection point. So if that point is successfully broken, then we can see a premature upside of the whole symmetrical triangle. Which means that wave C will be technically the wave 2 of the super cycle wave. All right. So, but however, if 3,500 points is going to be rejected, means aka a reversal, then we will see that the support zone at 2,500 will be the point E, and that is, should that happen, this period of time will take a very long period. I forecast it will be estimate to be around 2 years. Right. So on the next slide, the weekly chart. So the weekly chart, right, you can see that price did like have a last minute rebound on last week of May, and then price is still showing some form of resistance at the resistance zone 1. So therefore, I think the support zone, all right, that we are looking at it is some sort of like a pullback to the downtrend line support. All right, so but I think that first of all, the price structure and the momentum analysis indicate that there will be a potential last leg down to form the wave 3. So it will be like 1, 2, 3 down to 2,900 points before a strong rebound to the upside to test resistance zone 2, which is around 3,004 to 3,005, which confluence with what we shared earlier on the monthly chart. All right, so on the next slide is about the daily chart. You can see that on a glance, the daily chart is broken out of the uptrend line, immediate uptrend line. So prices has already like is on a ranging market right now. So price is likely to find a correction down to the support zone 1 over the next 3 to 4 weeks. All right, if should price break the immediate resistance zone, which highly is not going to break anytime soon, then we can see the immediate target of 3,350 level. All right, the reason why that we think that it's not going to break, like what I mentioned on the weekly chart, we're going to see a 3 subwave down to the support zone 2, which is around 2008 to 2009 region. And secondly, the Ichimoku has indicated that the momentum remains flat and is tilted on the bearish side, indicated by the Chico span, the lagging span. The lagging span is right now trending below the candles, and then the Senko span A and B is remaining flat. All right, and then you can look at the Kijun Sen and Tenkan Sen. It all are flat at the moment. All right, so I'm done with the STI. So next one will be on Nanofilm. So Nanofilm did issue a report. Is part of a long growth stock that I maintain technically. First of all, I think I received I've published a report on this, I think back in April. Unfortunately, it did hit my stop loss price as I didn't factor in a larger stop loss ratio. So, but however, I'm still very bullish on it. So, but there are 2 things that I need you guys to consider. First of all is, although there's a strong rebound, expected rebound from support zone 2 is around $4.73. up to $5.50 region. So the highest was $5.58, as you can see, before a slew of correction came down at the target resistance zone 1. So means that price is still unable to break the target resistance zone 1. And then price is likely to find long-term support, short-term support as a support-term resistance zone, which is between $4.97 to $5.10 region before a strong rebound on the upside. But do take note that if the support-term resistance zone is being broken, then likely we are going to find extended 333 or 333 corrective wave. Means that the long-term support will generally be at $4.42 before a strong rebound. But in either way, both support zone 2 or 3 or support resistance zone 2 is factoring the rebound, the probability of a very longer trend will be a strong one, because first of all, we have complete the 5-wave subwave, and then wave 2 is ongoing, which is represented by ABC corrective flat or the 333. Means that once all these waves, wave 1 and 2 are completed, then we are seeing a wave 3 primary phase, which is the strongest wave of all. All right. So the next one, I will move on to capital-led integrated commercial trust. Yeah. So for CICT, price is still the movement is still like well expected within our report on dated 18 May. Price has already broken out a falling wedge, although not a very strong one, but likelihood if any pullback, if price is not going to clear $2.25, likely a pullback will pull back to $2.07 before rebound up to the resistance zone at $2.46 to $2.55. Either way, once price going to reach 2.46 to 2.55, then we are expecting a major reversal down to the support zone 2. Right. So the next slide will be my last slide, will be on ThaiBev. So for ThaiBev, is one of the report that I published. As compared to, although the price structure remain the same, like the CICT and Capital DC REIT, but for Thai beverage, right, the upside remain elusive. The upside remain corrective as it failed to clear the neckline resistance at 0.71 to 0.7205. So hence, I'm remain neutral for now for Thai beverage. All right, so that's all for now. I pass my time to Paul for the IS Biopharma update and the Singapore Weekly. Thank you, Paul. Over to you.
Thanks, Biren. Move on to IX Biopharma. I'll be taking over coverage from Wee Kuang. So we issued a report this morning just to provide an update. There were a few updates. Next slide. The first update was they were granted FDA orphan status for a rare disorder, CRPS. This means that if they still have to do clinical studies, but it will be fewer subjects and a shorter timeline. So if this is approved, they will be given a 7-year exclusivity because there's no treatment right now for this very rare pain disorder. And with this, obviously, there will also be higher pricing, but they still need to do some studies on it, clinical studies or trials. The next announcement they made was an expansion in their capacity. And the most recent was a rights issue. This rights issue is pretty small in terms of dilution, because the third price or the theoretical X-rights price is only 237 compared to the last traded price. I think it's like 224 or 235. So even if you don't subscribe to these rights, there's not much dilution for a shareholder. So what this means for us, just as a refresh, some of the main drugs for IX Biopharma are in the pictures that you see. So the key one is actually Wafirmin. So Wafirmin is a sublingual ketamine. Sublingual, i.e. what it means that you just put it under the tongue and it can be absorbed into your bloodstream faster and more effective because it doesn't have to go through your stomach and so forth. So what happens is that with this new CRPS treatment, the potential application has been expanded from treatment of acute pain to depression and now CRPS. The next is the wafer expansion. So this is within our expectations, and this is positive because it will meet the rising demand for their products, which is the entity nutraceuticals. Basically, this is just it's more like beauty products in a way, because it's supplements, for pigmentation and so forth. So there's this popular product they have called Luminix, which is sold in China. The pictures on the bottom right. And the other product that's also getting large demand is medicinal cannabis, is the Sativa product, the one you see in the second from the right. So that product is mainly doctors will prescribe this for those who have pain or depression and so forth in Australia, for medicinal use, of course. So for us, we maintain our buy recommendation. The key catalyst for them would be the Wafermin. So Wafermin has completed phase 2 clinical trials. So right now, as they move into phase 3, they want to out-license. So what this means is that they will try to get a large pharmaceutical company to buy the license. So from this, they can get a one-off revenue stream payment. And the next would be, once this product is approved and complete their phase 3 trials, whatever revenue, they can get a revenue share. And of course, they will also get payments as the phase 3 trials complete certain milestones. So this will be the big catalyst for them. The other catalyst will be revenue contributions once the capacity is up from the entity and Sativa product that we just mentioned. The third catalyst, which may be a bit further away, will be the commercialization of WaferSeal. So WaferSeal, the product on the second from your left, is basically the Viagra active ingredients, sildenafil, which is used into their tablet. And what is right now is being tested now in China, and once it's approved, it can be commercially sold in China. So the key thing for them, the similarity across all the 4 products is the Waferix technology, which is sublingual. So obviously you can put any drug under your tongue, you put a Panadol under your tongue, it's still going to dissolve. But the key technology here is that it needs to be absorbed and be able to go into the bloodstream fast and effective. So that's the key technology. Next slide. Okay, I'll move on to our usual weekly update. Next slide. In terms of the macro numbers that came out for Singapore, we had our visitor arrivals, obviously still a very, very big number, 14.2 thousand arrivals. It's actually the weakest arrivals for the year. There was some good news from the construction side. So for me, contracts awarded by mainly public sector, that was the big, because you can split between public and private. So public was the one that provided the largest award. So there was about 3 billion. So this is the highest amount of construction awarded in almost 21 months. The numbers can be volatile, but at least it's positive that this is the big award by the public sector since 21 months. So it's moving back to the pre-pandemic levels. The next would be in the US. Of course, the one that grabs all the headlines now is all about inflation. So there was the core CPI number that came out in May is 3.8. So this is a big read because this is the highest since 1992, no more than 30 years ago. But some of the reasons why you see this big jump in inflation is a lot of it, like used cars and trucks, because of the shortage, is spiked up 30%. So I'm not sure if you raise interest rates, are going to curb, because it's more supply-driven constraints that's causing. Of course, airline fares also all surge because as they remove lockdowns and travel returns. In terms of our view tactically, we don't think there is circular inflation. That means long-term inflation underway in the US. Like, in the 1970s, you got this big jump in inflation and that collapsed the whole market. We will dwell more on it in our third quarter strategy, because the setup, the macro setup isn't like what we see in the 70s in terms of employment, labor bargaining levels and so forth. But we will deal with it in our third quarter. In terms of nearer term, we think there could be a risk-on rally for us. I think one of the reasons that bond yields or interest rates actually came down, even though we had such a high inflation rate. Of course, there are some technical issues. Some say it's because of the Fed and so forth. But nevertheless, these are still at near 3-month lows in interest rates. And of the 1.75 for almost 30 basis points off the highs of 1.74 this year. So what this means is that any expectations of higher interest rates kind of curtailing or short-circuiting the rally is probably not founded right now, because interest rates are expected to remain low for the rest of this year. And the other positive is the Singapore reopening as we move on to phase 3A. That should be another driver for optimism. The third positive that we think is the base effect. So last year we had the circuit breaker. So once the second quarter numbers are released, we think you're going to get a lot of strong numbers coming out from a lot of corporates, because last year everything was shut. So this year, second quarter 21, year on year, you're going to see some very good numbers for the corporates. So this should be another boost to sentiment. The other thing, I mean, just what some of the market chatter now is that although we are having an endemic right now, but I guess the key is that most important is not threatening healthcare systems or mortality rates. So what this means is that you can't expect to lock down the economy. If this is treated like another flu symptoms, again, this is highly debatable, but if this is another flu symptoms, flu season, you can't shut down the whole economy. Yeah. Most important, there's no real threat to the healthcare system. So that could kind of result in more reopenings and less heavy lockdowns if this is the view taken by the authorities. And some of the stock sectors, if you write on this recently, we think will be REITs. Because last year REITs had to give a lot of rental rebates. So this quarter you won't see as much of that, and you should get this year-on-year base effect. And of course, you get financials and also building materials as construction returns. In terms of the key events for this week, I think main one will be the FOMC meeting. So everyone will be watching and just see whether, I guess the Fed, whether they're blinking or we don't expect them to say anything that they're going to loosen or kind of pull back any of their bond buying right now in the market. In terms of the webinars that we are having, for this week we will have two, Mimion Tech and Marco Polo. Actually, I'm not sure why Marco Polo is not on the polls, but anyway, these are the two for this week. And next week we'll have EnviroHub and also SPH. Next slide. As usual, we run through the pandemic cases. So globally, you see the blue line, it's trending down very fast. We are declining like 50% month-on-month. And what's important is also, we are actually quite close to the year lows. The year low we had for 2021 was in February, late February, about 354,000 cases globally. So right now we're trending about 384. So we could actually exceed the lows in February. And as you recall, in February, first quarter, everyone was very optimistic that the pandemic will go away. So we could get this optimism back again because things are trending down faster than in February. Next slide. I think Asia, everything is coming off, but I think as we know in Malaysia, the lockdown is extended another 2 weeks because the cases are still very high. So you can see from the yellow bar, it's about 6,000. In Europe, most are trending down, but there's a bit of a worrying sign in the UK. Cases spiking back up to 8,000 plus. That's why the UK may actually relax some of they are supposed to remove all restrictions for 21st of June, but with the cases coming back out, I think they might actually defer the decision which is today. But anyway, next slide. Back here in Singapore, the good news is that in the past week, we had only 39, I guess, compared to the 116 that we got the prior week. So the number of community cases in Singapore really collapsed by 2/3 to 39 roughly. And we are off to like 5 to 6 average. So the average right now is 5.6, the 7-day moving average, compared to our peak of 28. So we kind of like arrested it reasonably well. And the levels we're getting is even lower than we had in the middle of June last year in terms of the 18th of June, the 7 cases, when we were in the middle of phase 2. So right now we're phase 3A and we're going to, as we all know, we're going to be relaxing it in 2 phases, 14 June and 21 June. And next slide. And this slide is just to give you some graphical illustration of the surge in inflation in the US. So you can see it's back to 3.8. I mean, I didn't draw it back to 1992, but you can see the big spike anyway, the table on the left. The table on the right is another measure the Fed uses. They have their own, it's a quarterly measure, but that's a bit late. So if you look at this, so one of the things people look at is also inflation expectations. So this is using the bond, the TIPS, which is the bond interest rate that has inflation inside it. So the CPI inside. So this is just, they just look at it. So they just remove it and see what is the expectations for interest rates. So if this continues to spike up, then one way to read it is that the market expects inflation to be quite sustained and elevated. But you can see right now it's actually starting to tip downwards. So worries of a Fed prematurely hiking will be probably going to kind of rest for now. Next slide. Okay, I was away last week, so we're just going to run through our model portfolio, how it performed, and in general, what sectors did well in May. So if you look at the table on the left, this is our so-called model portfolio. So what helped us, the gain for last month was the big 40% jump in Propnex in just 1 month. So that was the one that helped, and also Q&M also did well. If you exclude this, I think most of the stocks were actually flat or down. So REITs were also still quite weak, and partly all the stocks were all affected by Singapore going back into lockdowns. And if you look at the table on the far right, this is just to have a quick look at what sectors did well, roughly weighted by market cap. So you can see that what did well, what didn't do well at least was commodities, but this one is all because of Wilmar's heavy weight, so that's why, as you can see, commodities is down. Most of the REIT sectors also performed quite poorly. You can see hospitality, office, everything was actually down. What helped up the index? The index was actually down 1.7%, but what helped it was actually the banking sector was actually flat, so that helped it. So the table on the bottom is just a measure of performance. Again, it's not meant, it's just for illustration, and we just want to be a bit more accountable for all recommendations so you can see the performance. The stocks that you see on the right-hand side, bottom right, these are some of the big gainers and big losers, roughly those that have that we kind of track. So you can see that the real estate agents did very, very well last month. I think Propnex up 40, Apex almost 40, and some of the commodity stocks like Indo, Food Agri, Palm Oil, and also Golden Energy, which is coal. So these are the stocks that did well. The ones that got hit were a lot of the deep cyclicals like AEM, UGs, and surprisingly even StarHub and Banyan Tree because of hospitality. So anyway, this is just a snapshot of the performance for everyone's reference. Next slide. I think this is my last slide. I think we can move on to Q&A. Thank you, everyone. I think, Biren, a lot of it is yours. I think you handle the first thing. Yeah, okay.
Sure, no problem. Then I'll just start my technical questions. So first, just allow me to share my screen first. Yeah, okay. So if you can see my screen, just do a type 1 in the chat, and then or just raise your hand so that I know that you are on the same channel with me. Okay, thank you very much. So I'll just I read through some of the Q&A questions already that I'll be present that's being asked. So I'll just select a few. Basically, I think first of all, I start with the DBS by Chris. So DBS actually has a false theoretically is still having a false it may be a bear trap upon reaching $30.58, and then price is likely to face some like 3-wave down of corrections. All right, to the support zone, the major support at 26.71 to 27.33. So what is the alternative? Alternative is another support at 28.97 to 29.37, right? It's likely to be a next target. So if this level is going to hold, it will be supported, then we can see a price is going to resume up to the $32. Otherwise, I still maintain a correction down to 26.71 to 27.33. All right. So the next one will be Hong Leong Finance. Hong Leong Finance, last week, I mentioned already, is going to be a pennant pattern. My view still remains, all right. Major support still remains at 0.92 to 0.94, all right, nothing changed. Razor, as mentioned, a very strong diamond pattern with a strong bearish sell down. This diamond pattern is going to break lower. All right. First of all, I think the bearish flag, mini bearish flag over here is indicative of a bearish sell down of this impulse bearish move. All right. So long-term support will be $1.50 to $1.56. Okay. So next one will be Sunpower. Sunpower last week was a great one. But after that, price followed by a dark cloud cover or harami pattern, then gap down. This is like a breakaway gap. So likely, right, we're going to see a bullish flag targeting support zone 1 or support zone 2 once again. Okay, so to take note of these two support zones, 0.75 to 0.78 and 0.705 to 0.73. All in all, the maximum support is at 0.625 to 0.655. Next one will be Bull State. Bull State has a very strong run up, a strong measuring gap. However, I think we are last leg of the bullish wave, so we are looking for a corrective down. So we are seeing some sort of upside. So if you ask me, the total support, right, that I'll be looking at is 0.97 to 1.06 major support. So once this price reach this zone, it will likely to be a very strong rebound to the upside. Okay. So QNM Dental, I'm still maintaining my bearish divergence. Despite some upside, but you can see that this is like some sort like a triple top or a head and shoulder formation. So I'm staying neutral on QNM Dental. Next one will be on Top Glove. Top Glove is I still maintain my view on a support at 1.14 to 1.32. The view won't change unless this resistance zone break out very strongly above 1.95. All right, so yeah, Top Glove I won't change. Micro Mechanics, still the same thing. It has broke out of the channel of the immediate uptrend, in the secondary uptrend line. So price is still well within the immediate primary uptrend line, but I think that the support at 2.72 to 2.8 is likely to be a strong support. Furthermore, all right, this rectangle pattern has been touched many times, so is in response to this impulse bearish down move, so it's likely to continue downside to 2.72 to 2.80. AEM neutral for now, but neutral, but I'm more tilted to the bearish side. So any support zone, any downside, I will see support zone at 2.88 to 3.05 for a rebound. Lastly, UMS pennant pattern, price still stays elevated above the resistance support at 1.34 to 1.39. So hence, UMS, I will maintain, I'll rate it better than, technically, I'll rate it better than AEM for now. But we can see how that if price do have a correction down, then 1.19 to 1.13 will be the next support as well. All right, that's all. I think I've answered some of the questions. If there's time, I will just answer a few more. Thank you.
Yeah, and Natalie, you want to take that question? I'm not sure about this ascendance thing.
Okay, hi, good morning, everyone. Sorry. So I think it was on the 27th of May where Singtel announced that they will be, they announced their strategic reset, which includes unlocking value from its infrastructure asset portfolio. Basically, it consists of towers, satellites, subsea cables, and data centers. Yeah, so I think this in terms of this asset divestment, and in terms of versus the REITs are usually they want to be passive income owners, or rather passive property owners, where they actually lease out the asset without it could be on a master lease structure or maybe multi-tenanted structure where, in this case, right, when Singtel actually divests some of these assets, they will actually divest to people who are, or rather investors who have a longer term view and they don't mind holding on to these assets and generating a lower kind of ROI. So this doesn't really affect Ascendus in a sense, where actually, in fact, Ascendus could enter into a sale and leaseback with Singtel for these assets. Additionally, I think the other assets that Ascendus does have, which are leased out to Singtel, include, I think, the office, this asset at Paya Lebar, which is, if I'm not wrong, for the telecom assets, and it's on a relatively long lease of 20 years, starting in 2011, I think, yeah. So there's still quite some time left on this lease. Additionally, these are the assets that Singtel will require for, to continue on their business of providing telecommunications for in Singapore. Yeah. So don't really think that has an impact on Ascendus portfolio as well as the occupancy. Yeah. Thank you.
Okay, hello everyone. I will take the next question on Sunpower. So Sunpower has a PATMI of minus 61% year-on-year for first Q21. What will be the concern moving forward to next few quarters? This would, I think, be a mistake on my side. I use the PATMI for the financial statements with the financial effects of convertible bonds and warrants, but actually I think it should be PATMI not considering the financial effects of convertible bonds and warrants. So for the PATMI, the figure that I used, actually, because it's considering the effects of convertible bonds and warrants, so there was a lower fair value gain on the convertible bonds for the first Q 2021 as compared to first Q 2020. So if not considering that, the PATMI actually is increased from first Q 20 by 17%. Yep, so there won't be any concern moving forward to next few quarters. And also, I think answering together with another question that is asking about the target price on Sunpower. So for Sunpower, I think going forward, as I mentioned previously in the presentation earlier, they are targeting the completion of phase 1 and phase 2 of 3 projects by end of 2021. So there will be more contribution expected, and we do not have coverage on Sunpower, so unable to help on the target price. Yeah, hope that helps, and thank you.
Okay, in terms of the OTS, yeah, we didn't attend the briefing, so sorry for the IPO. We can't really give you any updates, but we will try to maybe get them for webinar, then everyone can have a look at it. Yeah, thanks. Yeah, sorry, we not able to answer that question. The other question is, may I know your take on Jiangsu Hengrui sorry for Hengrui compared to sharing on IX Biopharma. I'm not familiar with Jiangsu, but I saw their profile. They've got like 20,000 employees. So I think IX is probably smaller than one of their departments there. So I think not much comparison, and probably they do many more types of drugs, even oncology drugs. So probably not really a good comparison, because it's IX is far smaller. Yeah, but IX is more on the, but IX has gotten US FDA, so I'm not sure about Jiangsu. Maybe they're more for China, so I'm not particularly familiar. But I guess one difference might be Biopharma is FDA phase 2 approved. Yeah, thanks. In terms of the presentation, we probably can park the PDF copy in our stocks BNB under the community page, if there's any interest. Yeah, I think we can put a PDF copy. Yeah, thanks for that. The next one, over the weekend, Top Glove ADR shares, TGLP, have close close to 70%. In general, how does ADS shares affect the mean? It's actually fungible, so both prices should actually trade in line. Even DBS has a ADR, so most times they are just a slight premium. So I'm not sure what happened there, why they close so much higher. It shouldn't be because they are fungible, and the pricing should actually be quite close to each other between the primary market, which is now Malaysia, Singapore. Yeah, so I'm not sure what happened there. Let me just quickly run through. Hi Paul, thanks for your report on IX Biopharma. I saw from Poem Stock Analytics that their revenue dropped from 6 million to 0.5 in 28. Just curious if you know the result. IX has been listed since 2015. So they've been doing this drug development for quite a number of years. But what happened, just to answer your question, what happened was they sold for 12 million their clinical lab test business in, I think, 2018 or so forth. So so it's no longer part of the business. So that's why you saw this big drop. So they just focus more on, they use the money to just focus more on their drug development. And they sold that part of the business. Is in Australia, there was an unsolicited offer, I think, for 12 million. Yeah, so I hope that helps. Thanks. Okay, I think then, Natalie, thanks.
There's a question here regarding Keppel Pacific Oak US REIT. Are the sponsors related to Keppel Corp? So, Jason, actually, I think I replied your email, but anyway, Keppel Pacific Oak is managed by Keppel Pacific Oak US Management and is jointly owned 50-50% stake by Keppel Capital as well as Core Pacific Advisors. So for Keppel Capital, it is a wholly owned, 100% owned by Keppel Corp. It is their investment management arm. And for Core Pacific Advisors, KPA for short, this is a US-based real estate consultancy. So they are in charge of, for example, managing the property, leasing out the property, and they are the boots on the ground in the US because all of Core's assets are actually in the US. So that for Core Pacific Advisors, they are not in any way related or owned by Keppel Corp.
Yeah, I think we move back to you, Arvin. Are you on, Arvin? Okay, as you wait for Viren, there was another question. Top Glove had announced results. Any view on the glove sector? Oh, okay, I think they did announce the results, and so what happened was the numbers was of course tremendous. It was really good, but I guess the outlook is the one that kind of keeps people a bit more wary because prices are dropped. The prices in June, July has been falling, and also the what do you call it? The lead times have also dropped. So I think that's the concern that everyone has right now. Like how much more will prices drop? I think even that the management can't really comment like how much was the drop. But the good thing is that they are paying out a lot of dividends for now compared to the other glove makers. But I think that's the main thing. It's just about, and the other thing is they are waiting to get the approval from the US customs so that they will be able to supply gloves into the US market. I think those were the two major takeaways from us. Apart from that, there wasn't really much. It's all about the ASPs. So I think it's down like 20% quarter on quarter. Yeah. So I think that's the one that's kind of like worrying the market for now.
Okay, so sorry, I was away for a toilet break just now. So I'll just take on the new questions on the technicals. Okay, so resume it. So start with all the Capricorn from new counters that I've updated. For Capricorn, right? So right now, price is really came down to 5.10 to 5.17 support level. Given the momentum or the bearish downside, right, I think likely this one will break, and then we'll see $5 being supported once again. So let's see how the development for capital is right now. But major price, long-term price of $6.10 to $6.21 remains. Okay. So okay, so the next one will be Yangzijiang. Yangzijiang upside, right, will be is quite strong right now. Ever since it has a strong sell down, and but with well supported at the supported resistance zone at 1.34 to 1.38. Currently, there's a potential pattern is forming. So hence, if this resistance zone at 1.50 to 1.53 is going to be broken, then we can see a short-term target of 1.65 to 1.70 in the near future. All right. Okay, so next one, the razor I've done. So next one will be Wilma. So Wilma, right? Last week I shared about this pattern, and then some more. If you look closely, right, the pattern is still on forming. There's a bearish engulfing, so impulsive. So I think price is going to likely will turn lower for Wilma. All right, currently I think we are looking at the next target at 4.52 to 4.45. Baidu is continuous downtrend. I think I foresee further downtrend to the downside beyond $170 in the future. Same thing for JD. JD also in downtrend mode. However, do note that there is a formation of a inverted head and shoulder. So any upside, if there is, you would need the confirmation of breaking will be needed by breaking 305.8 Hong Kong dollars to 311.6. Otherwise, we won't consider. We will still consider this as a downtrend. UV Healthcare, same as the analysis per se as what I've shared on Top Glove. Long-term support remains at 0.520. Any upside temporary, I don't see any strong upside for now. UOL Group currently ranging, price upside momentum is still remains weak. So you can look at here, this is like a formation of a rising wedge formation. So hence long-term support, I'll be looking at this gap between 6.56 to 6.66. The next one will be UOB. I think for the banks, they will be moving in around in the same tandem. But price is so I remain on the downside. So long-term support, should there be the downside, be 23 to 24.20. All right. So for OCBC, it's slightly better, but due to like what I mentioned earlier, that price structure do move around with the SDI and the two largest bank. So hence OCBC I'm looking for a correction as well. As to where I think the back to $11 is possible as well. All right, so with that, I end off my technical sharing. So I'll pass my time back to my colleague. Thank you.
He can't tell you what is going on.
Oh, he coming good. Oh.
Come, let's try wrap up the rest of the questions. Bumitama Agri dropped 3% today. Is this any cyclical move or company specific? I think it could be more industry drop. I think even Golden Agri is down, so don't really cover palm oil, but that could be one of the. I don't think it's company specific. Could be related to the whole palm oil sector. Hypo, with China implementation of its own digital RMB, what stocks will be adversely affected? Well, that one's tough. It's probably going to be bad for Bitcoin, I presume. And if you want to go and stretch it, you want further bet for Bitcoin mining. But really, I really don't have the answer for this. What stocks? It's a bit of a stretch especially for Singapore stocks. Really not clear what will be negatively affected. directly. Sorry, I can't help you on that. Apologies. Yeah, Top Glove was traded at US70 as told by my reminder. Why I'm not sure. You have to look at the ADR terms, because ADR sometimes can be 4 shares into 1 or 5 or 10 shares into 1. So ADR is not 1-to-1. Usually could be like 4 shares is 1 ADR. So you might have to double check. But I don't think there'll be that much of a big difference, because they tend to, because of it's fungible, so any difference won't be that large. Difference is any premium or discount between the US ADR and all. I think, that one I need to check, but I'm pretty sure it's not $70. It's probably like 10, maybe 10 Top Glove shares is 1 ADR. Thanks for the question. This one on SGX, Terence, you want to try or you want me to? Okay, since I attended the let me see. Okay, SGX Rise Take Profit. Okay, we attended the SGX Analyst Day. We'll probably give you a report later on, so we didn't brief. From my own I don't from my own point of view, I think it was quite positive. I mean, for SGX, that the two things. Number one, they hinted quite strongly that there could be unicorns listing on SGX, the US unicorn. This in the slides, not for me, but so they kind of hinted that quite strongly. And the second thing that was positive for me is that they are making headway into the other asset classes. Firstly, on futures. So for SGX, just as a refresh, SGX lost the MSCI contracts. I think it went to Hong Kong. So of course, it got sold down when the MSCI futures contracts were going to end. But what happened is that they managed to transition, and they showed the numbers that a lot of their clients transitioned from MSCI to FTSE. So maybe a client used to trade MSCI Taiwan, but then they now are willing to trade a FTSE Taiwan index. I'm a bit surprised because most of the clients should have this as benchmarks. So they are not particularly clear how they managed to do that. But so that was the other positive, number one. Number two, then number three is that for MSCI Singapore, which they still trade. So if some of these unicorns move, because MSCI Singapore's composition will actually rise if you include C and all that. So that is also another benefit, indirectly, although a small one, because MSCI index will rise maybe 1 percentage points to, I think, 3.5 percentage points. So that will help their trading of the index too here. And they're also making headway into the FX and fixed income. They also mentioned about a bit on the environmental products, but I think that's a bit far off. But for now, I think they're making headway into launching more fixed income and also FX products. And they're targeting the OTC. They're coming up with a new product that can target futures and also OTC FX. So looks positive for me. I mean, when I was listening in, that they are not just equities and derivatives, but moving on to more and more products. So that was my takeaway from that. Okay, dairy farm we don't cover, sorry, so I'm not particularly sure, so can't help you on that. SGX, I think you mentioned, so quite bullish on it. Okay, any views on Singtel and SIA? Especially the airlines is issuing bonds to finance the capex. I'm not sure. Okay, I just give you some general views. If Timothy has any for SIA, any for Singtel, we have a neutral. Operationally, to be frank, I mean, nothing going on with Singtel. I think there's really no, operationally it's quite weak. especially without roaming. So that's why we have a neutral. There might be some headlines over Singtel because they might be, like we mentioned before, they might be selling some towers in Australia. But we are not big fans of that. Like we mentioned, it's like you sell your factory, then you rent it back, then you tell everybody it's a big gain, it's a big restructuring. But it's all about, you still have to pay rent on the factory, which is their base stations. So we're not that excited about it. Of course, they might announce some dividends, but again, it's like you sell something, then you're going to rent it back, then you say it's a big gain. So not really, the economics for us don't really look that attractive. Yeah. Okay, Jeffrey, I think you got something. Okay, I think I'll hold for now.
Okay, I'll just take the question on the Yoma portion for the question. So the question is, what do you think of Yoma share? For Yoma, our current call and target price is a neutral, and the target price is still at 14.7 cents. This is still unchanged. As mentioned in our last briefing, violence is still ongoing in Myanmar, which is a major overhang for the counter, given that Yoma's businesses are quite dependent on the country's economic growth. F&B and motors will likely still be the largest pain points, and Yoma has actually looked to cut cash, conserve cash during this period of time by reducing OPEX and also deferring the bulk of its CAPEX. The 1 year state of emergency is expected to end in February next year. So until then, it's likely that Myanmar's situation may actually stay this way. Yeah, so this is all for the Yoma part of the question.
Yeah, just to add on, I think when there was a briefing when we did ask them what could be one scenario for the politics. So I guess the best case scenario, I think this is our own view, I think nobody really knows, is it becomes like a Thailand situation where the military will rule and the politics, they will hold an election and then the military will win. So that hope is probably going to be the best case. Not sure if the base case, but that is probably going to be the best case scenario. It would be like some sort like a Thailand kind of arrangement, I guess. Yeah. Correct me if I'm wrong, actually. Yeah. Dennis, you want to take the DBS? I'm not sure what is Bitcoin.
Terence is not currently at his desk. I think he went to the toilet.
Okay. I'll move on to the venture. Please share about the venture corp future. Firstly, venture. I've gone to their briefing for many years. They don't really share much on terms of the outlook. So we don't think we think earnings will be quite weak for this quarter, the next 1-2 quarters. Only maybe in the fourth quarter, the medical products can pick up momentum. I think that's what's holding back the revenue, because the medical products take some time for it to gain momentum. So that we think will be the next driver for them. In the meantime, I think the next 1-2 quarters won't be great, but I think they will still give up very good dividends because their cash holdings continue to pile up. If they don't, I think they could even end up with almost $1 billion of cash, or because it's already almost 900 million. So we think the dividends will still be attractive. I think could be, correct me if I'm wrong, but maybe like 4-5% kind of dividends, and for a huge net cash company. So I think venture is still attractive, but don't expect any huge earnings growth for the near term. It could come in maybe we think could be on the later part of this year, because they've been harping a lot of the life science products, but it takes time to ramp up for this type of product, because venture is so huge. It takes some time to move any needle for any product category. Can you share on sets? We don't cover, so sorry, can't comment. We kind of drop coverage on sets. Yeah. And another question was on StarHub. I cover StarHub. So for us, again, not much earnings momentum, but they will still commit to, I think, at least a 5-cent dividend. So it was more of a stable dividend yield for now, and you just have to wait until, I guess, borders reopen, then the roaming revenue will come up. One hidden value for me for StarHub is on their cybersecurity business. I think that is that is partly owned by Temasek, and they actually do a lot of, I guess, public sector work. So it's quite captive, and I think it's probably like a gem in StarHub for StarHub. I think it's just that it takes time for this company to maybe turn more EBITDA positive, and then later on maybe start to list this company. So I think StarHub, maybe near term not so attractive, but in the medium term, the two positive catalysts would be, of course, hopefully reopening of borders and the roaming revenue, which is 20% of revenue, and maybe more than 20% in terms of earnings, because this is a high margin business. That could come back on, and also some restructuring over their cybersecurity business. So medium term for me, it looks interesting from that sense, but near term will be quite weak. I think for the rest of this year, without the roaming revenue and cyber business starting to only scale up slowly, so I don't think that anything exciting for them for the next couple of quarters. Why is Union Gas continue up? I have really no idea. We tried to meet them, but they just ignore us, I guess. Okay. If there are no others, I think. Sorry, Natalie.
Okay, I'll take the question on what's your view on OUE Commercial Trust. So just as a recap, we don't cover OUE. However, we did attend their briefing. Just give me a minute. Okay, so just as a refresher, OUE is a diversified REIT. So they have hotel assets, for example, Crown Plaza, which is located right beside Changi Airport. They also have Mandarin Orchard, which is their larger commercial asset, hospitality asset, and that is also linked to the Marina Gallery Mall, just located along Orchard Road. And of course, the larger portion, about 62.5% of the portfolio, is actually from MPI is actually contributed from the office assets. So they have several. Most of the office assets are in Singapore. They have OUE Bayfront, which is the prime CBD asset, and then of course they have One Raffles Place, I think, yeah, and then that is also quite prime, located at Raffles Place MRT station, and they have a OUE Downtown, which is along I think the Tanjong Pagar Anson Street area, and it is in comparison to their OUE Bayfront and One Raffles Place, it's not so doesn't command such high rents, about $9 per square foot. So in general, for their office portfolio, they also have one asset which is Lipo Plaza in Shanghai. So overall, their office assets, because of their location within the core CBD area, if you recall last year, 2020, especially, we saw that the island-wide occupancy actually dropped. However, the occupancy for the CBD stock actually increased. So that is attributed to flight to quality, which means that, you know, when these prime office assets actually drop their rents, this actually provides an opportunity for tenants who are located in not so good buildings, maybe your grade B kind of buildings, to upgrade. And of course, at the start of this year, we saw that leasing actually did pick up for the office assets, and these prime assets are expected to sort of still be relatively well positioned. On top of that, for OUECT's office portfolio, it is actually relatively under rented, meaning to say that their in-place rents are still below market rents. So that means that there's still some positive rental reversions that can be expected for this portfolio. So they actually registered 3.8% to 7.4% rental reversions this first quarter, ended March 31st. Yeah. Apart from that, in terms of their office of their hospitality portfolio, I think one of the towers in Mandarin Orchard is currently under SHN, stay home notice, block booking by the government, and they are also rebranding this Mandarin Orchard asset to Hilton during this lull period. So of course, this asset still has a master lease agreement, so they're still earning the minimum rent, and the opportunity cost of rebranding this asset to, you know, a more luxurious Hilton branding is relatively low, especially during this period. And as more flights are allowed to take off and more people are allowed to travel, of course that will benefit the Crown Plaza asset, because of you know, it does they do receive some bookings from the airline crew. Yeah. Okay, so in general, we do expect this counter to be it's still about 25% down from pre-COVID levels. I think still expected to be relatively weak in that sense. But yeah, as the economy picks up and as the economy reopens, I think there will be more potential for OUECT. Yeah, so that's all for that for OUECT. Oh, okay, sorry. I just saw another question. Outlook for FCT. So we do have coverage on FCT. In general, nothing really much has changed. They have divested 2 of their smaller assets, UT Point, as well as they completed the divestment of Anchor Point. So meaning to say that now their assets are all relatively evenly sized, because the Anchor Point and UT Point were actually relatively small in comparison to like Causeway Point, North Point. We expect them to be relatively resilient. As you know, they are suburban and they are located near the heartlands. And of course, the extension of the government's, I think the co-sharing of delivery fees will benefit some of their tenants and also continue to spur, local consumption. In terms of distribution yields, we are expecting a 5.5% yield for FY21. Yeah. Okay, that's all for FCT.
Okay, there's a question on asking when will the attendees be able to have a webinar view, and yeah, it's useful to hear their view of their situation. We have reached out to them for a webinar a couple of times, but they haven't been able to revert on the dates. So we will continue to reach out to them again. Hopefully they'll get back to us.
Anyone can take the EC World question.
Hello, so I'll take the DBS question. So I'll just read out the question first. Can comment on the potential gain of DBS going into Bitcoin. So maybe to make it more specific, DBS recently offered their customers, more specifically their accredited investors, the opportunity to invest into Bitcoin. So there are 2 main gains for DBS specifically in this regard. They will be able to benefit from the transaction services fees for the accredited investors to invest in Bitcoin. And the second, obviously, is the custodian services in terms of the wallet for holding this Bitcoin. But this business at this moment, even though DBS is seeing a month-on-month growth in this business, but it's still too small. And this is based on transaction volume and custodian fees. So the benefit for the entire group is a little bit small at this moment. And we think going forward, if the DBS is likely to remain cautious on this, because they're not going to expand the offering of Bitcoin to every investor. Every investor, like what they say now, you need to pass their risk assessment test before you can invest in such a risky product. So the number of clients eligible to trade Bitcoin at this moment or any other cryptocurrencies will likely remain low in the near term. So let me know if I answer your question. Thanks.
Thanks.
Okay, apparently there's a question on EC World. EC World's price has risen to 82 cents. What is the catalyst for the price increase and the prospect for higher? Sorry, the question just jumped. higher price for the stock. Thanks. Okay, so EC World is, as you know, a logistics or rather industrial REIT located in holding assets located in China. As a logistic REIT, I think as well as a lot of their assets are on master lease with their sponsor, so that actually I think a lot of their earnings there's a lot of earnings visibility in that sense, and apart from assets that are not held with their sponsor, one of the assets which was announced that they actually managed to secure a renewal with is actually leased out to state-owned enterprise by our state-owned entity, and it is tobacco used for the housing of tobacco. Yeah, so I think in general the market seems to like that they are their earnings visibility is relatively strong, and very little rental rebates are expected. That's my best guess. Okay.
Okay, there's a question. Can you advise on the outlook of Netlink? The outlook, there's a good thing about Netlink, there's nothing going on, and that's the good thing because it's supposed to be that way. It's supposed to be very boring. But anyway, for this year, we're just expecting maybe 20,000 new fiber connections. Might be a bit on the aggressive side because depending how HDB rolls out their units, but that's our expectation. So that is the one growth driver. The other thing that came up from the last briefing was the non-resident, which is the office part, where they really have to compete with other players like Singtel. That one, there's a bit of a price competition, but the main revenue still comes from residential connections. So this stock is not very stable. This pays that 5% dividend yield as they've got 1.4 plus million subscribers. Sorry, residential connections, because the subscribers are actually through the telcos. So it's just status quo. I mean, it's going to be very, very stable for Netlink for this year. Thanks. Okay, what about UG Health? Sorry. Okay, I'll just quick. UG Health, I think no change in our view. We've already factored in the lower prices. But what can help them grow will be the 50% jump in capacity. And so that is our main thesis for UG Health. Because we are pricing in on FY22 PE, but because sentiment is still negative, because people are still unclear of how much more glove prices are going to come down. But we've already kind of factored that in, about a 20-30% drop. But again, if it comes out more, then there could be downside. But for us, the big jump, the new capacity will be the big growth driver for them. Yeah. Okay, sorry, go ahead, Biren.
Okay, I take a last few technical questions before I think I pass off my time to my other colleagues, or we just end off the session if there's no other question. So just due to time constraint, I'll just only share a selected few from the Q&A. So first of all, if you look at Golden Agri, I think Golden Agri from the weekly chart, you can see that it's obviously still on a downtrend. 200 weeks moving average is still down. Price did like a graveyard doji below the resistance 0.26 to 0.28. So price is likely to fall further to 0.200 20 cents before rebound. So evidently you can see in the chart. All right, so prices is likely to correct further down to 0.210. If 0.2 is broken, then 0.18 to 0.165 will be the next. Okay, sorry. I think just now you can't see chart. Okay, thanks to my colleagues. Okay, so okay, let's just repeat about the Golden Agri. So Golden Agri. So Golden Agri has a like a sell down, rejected the resistance at 0.26 or 0.28. Price is going to like price is on a prominent downtrend. That's one. And then secondly, I think the daily chart, okay, shows that price is already on a corrective impulse down, corrective bearish flag in response to this bearish sell down. So theoretically, I think if 0.2 is going to break, it's not being supported, then I think the next support zone will be 0.185 to 0.170. All right, that's for Golden REIT. Okay, so for Fuyi, right? Fuyi, larger trend is still on the downside. It just that recently it has been on the upside. So on the technical chart, on the daily chart, if you like a bullish signal, then this larger symmetrical triangle will be a signal as well. But unfortunately, I think you can see from the candles, it's very low volatility, low volume. So I really have no idea that how the stock is going to move up to how many percent, what's the upside. All right, apologies. As for venture is still on the downside. Long-term wise, I think I mentioned a couple of webinars ago, I'm still waiting for 17.14 to 17.44 support zone. Reason why I think after it breaks off this small pennant rising momentum wasn't that strong, and then a pullback, and then slightly more than a downside going on after that. Okay. All right, so next one will be iFast. So how strong iFast is, I think it has already breaks the $7 resistance, which I mentioned a lot of time that it's unlikely to break, but yeah, look at it now, it's broken. So right now there's like some sort of like a little pattern. All right, but I'm more of a like thinking of a flag that could rebound at 7.87 before on the upside. So more data will be needed for iFast upside. All right. So for LHN, I think last week when Vivian released a report, and then someone asked as well. Okay, so the Morningstar, I mentioned that if last week that if the Morningstar is being confirmed, it is likely to break on the upside. So technically, yeah, it's still strong on the upside. So price is going to like any support, it will be at 0.380 region. Okay, so going forward, I think long-term target wise, I'm looking at 0.5 in the very extremely long run period. Okay. So that's all for me. I think due to time constraint, I hand over to Paul to do a closing if or should he want to answer any question. Thank you.
Yeah, okay. Anyway, yeah, you're right. I think some attendee mentioned yet on the 17th of May, EC will mention that their sponsor Foshan there's a possible deal to be made. Yeah. I mean, you're right. Yeah. There was a chat comment from there. Okay, let me just take this last question. What's your call on 10-year yields? Huge story last week. If we get the call on yields wrong, the call on banks will be wrong. Not really. Actually, if rates do rise, it will be positive for the banks. So that's the irony of it, and it's positive because the margins will be higher. And you know, the good thing about banks is their interest income is variable. So whereas, you know, if you buy a bond, your interest income is flat. It's fixed. So banks actually get a benefit. So banks is protected in that sense. So even if 10-year yields actually do rise, it will benefit the banks, and it will also benefit SGX because SGX collect quite a lot of income on the treasury or interest income, you know, from all those overnight holdings and so forth. So SGX is also another big beneficiary of, I don't have the exact numbers, but it's quite a huge contributor to their earnings, the treasury income. So in a way, rising rates is actually positive for the Singapore market because for the banks and SGX financials. Okay. Anyway, I think in view of time, we might have. Timothy, please go ahead.
Yeah. I think the question was about the yields falling because last week the yields fell quite a bit. So I think they're asking about whether the yields are going to fall instead of going to rise. Yeah. Okay.
Okay. We already mentioned that most likely the yields will go sideways. I don't think it will fall that drastically. Yeah, because you know eventually the Fed is going to unravel all this. Eventually they will have to pull back some of the bond buying. just like they're just behind the curve, but they're intentionally behind the curve. So I don't think yields will drop that much. I think it's more likely going to move sideways. Yeah. I hope that kind of answers it. Okay, I think in view of time, I think Virun has another one on 1 p.m. So thanks everyone for your time and questions. Sorry, some questions might be a bit out of our scope. I mean, we don't really cover every stock. So this is just our general view. So it may not be that detailed for some of the questions that you asked. But anyway, thanks everyone. And take care. Bye-bye.